The Bureau of Economic Analysis recently reported what's called its advanced estimate of first quarter GDP, and the 3.2% annualized rate beat consensus estimates and the fourth quarter rate handily. We're late in the current economic cycle, so history tells us to be watching for weakness or even a recession, but not in the first quarter. This was a very strong positive reading. So what happened? I'll share 3 things that stood out about this report. First, net exports jumped higher, driven by higher exports and lower imports during the quarter. This may be the result of U.S. efforts to improve our trading relationships, especially with China. Second, inventories grew over the quarter. Now, inventories tend to build up, then shrink, so this component of growth is not likely sustainable. And third, we saw certain categories break trend. State and local government spending up more than usual, durable spending down, and investment in intellectual capital up strongly. What can we expect about future GDP from this report? Well, as mentioned, we won't expect inventory growth to continue over time. Net exports will depend on trade, and that will be influenced by the ongoing efforts of the U.S. government in this area. And other areas may or may not continue to grow. But for now, the economy appears strong and on track to produce GDP growth in 2019 in line or even above our original forecast of 2.25% to 2.5%. I invite you to read SightLines to learn more about our thinking.